Welcome in. This is the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage. We talk about all kinds of more home buying, refinancing conversations, and really talk about how to get you into that mortgage that you're looking for and just some tips to help you along the way. As we do every month, it's time for Market Update, Bill. I hope you had a great new year. Good to see you for the first time here in 2025.
Ben, great to see you as well. Yeah, we had a really great new year, really great holiday. The whole month of December was great. Got to see lots of friends and family and had a little downtime at the end of the month. So it really was fantastic. How about you? How was your holiday?
Yeah, we had a good one as well. Did a little bit of travel, not a whole lot. Kids did great in the car. So that was a Christmas miracle, I guess, so to speak. So
That's
we
great.
survived that. So I'm happy. But I'm kind of curious because, 2024 is an interesting year from a mortgage perspective. I know a lot happened. The Fed rate cut. I think a lot of people were kind of wondering what would happen around the election. We had that kind of come and go. So I'm curious kind of what's the thing you're looking at right now to start 2025, because it's kind of a fresh slate and a new start to the year.
Yeah. So from an interest rate perspective and some market analysis, we think that rates should range anywhere from 5.5% to 7%, right? If we had to provide a range, there's a possibility rates could get into the fives, and maybe the lowest would be roughly 5.5 that we can see. And these forecasts are basically a synthesis of all the different. We actually have market forecasting professionals that we work with to try and understand the market. So, a synthesis of what they believe, and then taking, what we see and what we believe gives us that range. And, the Fed, the misconception is, and this happened exactly last year, is the Fed cut the rate. And every time they cut the rate, 30-year fixed rate mortgages increased. That rate went up. So, when from an advisory standpoint, when we're working with a customer, a lot of times we'll hear the customer say, I'm waiting for the Fed to cut the rate. And then we say, okay, but that means that your mortgage rate, if the Fed cuts the federal funds rate, the mortgage rate, your mortgage rate could go up. So this year, we expected some cuts. We didn't necessarily expect that those cuts would immediately correlate to lower interest rates. Now, there are some cuts on the table in 2025, but again, more importantly, I think what's driving rates right now is that the economy is still strong, and the economic indicators. So, difference between when you have conversations with your friends, most of them are saying stuff's too expensive. So they don't feel like the economy is strong. And that's the inflationary issue that they're working on. But the economic indicators, like a big one is GDP. And GDP is still outpacing what our standard run rate for GDP is expected to be. And that says that the economy is running a little too hot. So with inflation still not at the Fed's target of 2%, with GDP still above what their target is for a longer run GDP of closer to 2%, that is keeping interest rates higher for a longer time.
Yeah, that's interesting. And I knowing that range is kind of good. I think the 5.5 to 7, obviously not that that's going to be a definitive way this thing plays out, but kind of knowing that range is good, I think, because we've talked about this, Bill. People have been waiting and just been I guess, tied to their home because of their mortgage rate in a lot of ways, and have been waiting, anticipating, things are going to go down. I know it's going to pull back quite a bit from the 8 that it was, a year and a half ago, whatever that was, to hopefully back into the 4s and 5s. Well, I guess knowing kind of, hey, we got this kind of set range this year can kind of help people make that decision, right? Okay, we know it's not going to change a whole lot probably this year. We're not going to have a huge spike either way. So if you are thinking about a home, start acting on that.
Yeah, and Ben, I mean, you hit the nail on the head, right? Because what we try to provide as a roadmap for our customers that say, hey, It's January, and if you want to buy this year, expect interest rates in this range. And then if we're doing mortgage planning, we can play with rates in that range. And so we're going to quote you today's rate, but we're also going to talk about the possibility of a refinance. So let's just say we quoted you 6.5 today. Well, if we think that you could refinance within the next 12 to 24 months, we're not going to show you a possible refinance at 4% because that's highly unlikely. None of the forecasting that we see has us getting towards those interest rates, barring some kind of, extenuating circumstance that we're not even aware of yet. But if we're doing mortgage planning, we might be able to say, hey, in 12 to 24 months, there's a good chance you'll have a refinance opportunity that could get your rate into the fives, maybe even 5.5%. So giving that range creates a level of certainty to help us with planning so we can understand. And to your point again, Ben, there's a lot of people in their home at a 3% rate that are saying, my motivation isn't great enough to go from 3% to 7%.
Right.
But we feel like 6% is where the people who they're buyers that it depends on mortgage rates. So, mortgage rate buyers, they get off the fence when the increase in interest rate is less than double of what they're paying at 6%, 5.5%. They can justify and they could say, the extra square footage, the finished basement, the pool in the backyard, the different location, I'll pay a higher rate to have those things. But at more than double the current interest rate, a lot of those people are staying put.
Yeah, and I think once you put a 5 in front of it, that number that begins with a 5, I think a lot more people kind of perk up because it wasn't that long ago, Bill. We had rates in the 5s before it dropped to 4, 3, and then touched into the 2s there briefly. So I think a lot of people would say, okay, we're kind of back roughly in the ballpark to where we were, so it'll be interesting. But if you are looking for a home, think about a new home. The best thing to do is to go ahead and start that process. Again, you can get in touch with Bill at Cross Country Mortgage. Just go online, smartmortgageshow.com. You can also get in touch by calling 484-352-4151. And remind me too, Bill, because we're at the beginning of the year. I know we're in the middle of winter. We have, as we're recording this, I think most of the country is in a deep freeze in a lot of parts. I don't know how cold it is outside your door right now, but as things begin to warm up, I know the market starts picking back up again. So, is there any motivation to act quicker at the beginning of the year? Does it matter as much? Do you want to kind of beat the rush of the spring? Does that impact things at all?
Yeah, well, again, I think that we always believe in mortgage planning ahead of time. So if your plan is to buy in the spring or summer, getting your mortgage pre-approval in place now makes a lot of sense, because if there's any issues that we need to address, usually those issues have a length of time in order to correct them. So the more runway we have to address an issue, the better position you're going to be in when it comes time to buy. The other thing too is just, having an understanding of what the rates look like, what the payments look like, what the process looks like. And then the more familiar you are with those things, when you're out looking at the house, you're not worried about the mortgage because you already have a pretty good understanding of the framework. You've got your team in place. When we see people that have never had a mortgage, they're first-time home buyers, you get a call on a Friday night and they're like, we want to go see a house, and they're getting pre-approved for the first time. I mean, we certainly accommodate those folks, but man, their heads are spinning and we feel like the experience isn't as good as, okay, my mortgage piece is in place. I understand that. Now I'm just going to go walk around this house. I can be present in the house, paying attention, feeling the house, understanding that opportunity, because you're not super worried and distracted by the mortgage because there's a level of comfort with the mortgage.
That's a good point. It makes that experience a lot better. And ultimately, hopefully, will end up in a better outcome as well for you if you're looking to buy a home. So again, Bill is a regional president of Cross Country Mortgage. If you want to get in touch, smartmortgageshow.com. You can take advantage of a free 15-minute loan consultation, get to kind of know your situation a little bit better, your full financial picture to make sure that Bill and his team are helping getting you into the right mortgage. And ultimately, if they can't help you out, they want to put you in the right place to do so. So again, it's complimentary. It's the best place to start if you're thinking about buying a home. But a lot to look forward to, I think, in 2025, Bill. Should be a good year. So looking forward to kind of seeing how things develop over the next few months.
Yeah, awesome. We're excited about 2025. We do think it's going to be a really good year to buy a house. Hopefully it's good for a variety of reasons. So here's to a great 2025. Thank you so much.
Absolutely. And thank you for watching too. We appreciate your support. Please hit subscribe here on the channel. And if you aren't on YouTube yet, come over and check us out there as well. So for Bill Litton over at Cross Country Mortgage, I am Ben George. Take care.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.